You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 25th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through on screen, step by step, how to take the trial. We'll get your indicators up and running, and then you'll get 5 consecutive trading days, no credit card required, with access to everything we offer our passport holders, the only exception being the members only workshop on Thursday night. Now, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. There will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, it's a great way to get to know how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a handy resource for someone who's new to CFRN to see how we've evolved over the years. Again, youtube.com/CFRN. This is our afternoon schedule each day. So we're going to dive right into our daily devotional. The topic that we're on right now, and we have been for 10 days, doing things that matter. Our scripture today is Matthew 5:38 through 42. I'm going to share it with you from the Message translation. Here's another old saying that deserves a second look. Eye for eye, tooth for tooth. Is that going to get us anywhere? Here's what I propose. Don't hit back at all. If someone strikes you, stand there and take it. If someone drags you into court and sues you for the shirt off your back, gift wrap your best coat and make a present of it. And if someone takes unfair advantage of you, use the occasion to practice the servant life. No more tit for tat stuff. Live generously. Again, that's Matthew 5, verses 38 through 42. Today we'll talk about loving recklessly, part 3. In our world, hatred, revenge, grudges, and anger seem to be around every corner. We find those things in politics, racism, families, and even churches. Jesus said that the greatest command is to love God and love your neighbor. Most of us can get with that, but he also calls us to love our enemies. What does that even mean? Are we talking about political enemies, people who've wronged us, people we disagree with? Do we really need to love them, and if so, how? In 1956, Martin Luther King Jr. was speaking at a rally when around 9 p.m. a boy interrupted him and shouted that King's house had been firebombed by the Ku Klux Klan. King ran out of the rally and found his house still on fire. The police and fire department were there, along with a large, angry mob of citizens from Montgomery, Alabama, who were there to support King. They surrounded the house with rifles, baseball bats, and other weapons, ready to retaliate. Those people were looking to get an eye for an eye. King stepped onto the porch of his home and said these words: "I want you to love your enemies. Be good to them. Love them. And let them know that you love them. We must meet hate with love. What we're doing is right. What we're doing is just. And God is with us. Go home with love in our hearts, with faith and with God in front. We cannot lose." As he spoke these words, the angry mob put down their guns and baseball bats and spontaneously broke into singing Amazing Grace. They sang, they cried, they peacefully went back to their homes. When we return hate with hate, it never ends well. But when we turn the other cheek, even to our enemies, that's when change is on the way. Martin Luther King brought change to the world by seeing things as Jesus saw them. The kind of love Jesus calls us to is not always easy, but it's always right. Those who choose to love God, our neighbors, and our enemies with a reckless love will be the ones who change the world. Who is someone that is difficult in your life right now to love? Perhaps an enemy or someone you have anger or hatred towards. Pray that God would soften your heart and give you the capacity to love them. That's loving recklessly. Let's pray. Heavenly Father, we ask that you would teach us to walk in the way of grace and not retaliation. Help us to respond to wrongdoing with love, to give generously, and to go the extra mile just as Jesus taught. Fill our hearts with patience, humility, and a desire to reflect your mercy in all that we do. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. The Dow's currently down 34 points. Nasdaq's up 50. S&P 500 up 2.5. The Russell 2000 down 11. No movers, no shakers. In the commodity basket, crude oil down 27 cents, trading 68.84 last. Gold up $12.10, trading 3,027 last. Silver up 77 cents, trading 34.22 last. And for silver, that's a gain of over 2.25%. In the Asian markets at the close, the Nikkei posted a gain of 172 points. The Shanghai was basically unchanged on the session, but the Hang Seng fell 561 points, almost 2.5%. And in the European markets at the close, FTSE up 22, the DAX up 193, which is almost 1%, and the CAC up 70. That also is almost 1%. So we had a mixed day in Asia. It was a green day for the UK. And it's a mixed Radio Tuesday here in the US of A. We have two of the major indices in the red. The Dow down 34. It's not a lot for the Dow. For the Russell down 11. That's fairly substantial. And we have the Nasdaq and the S&P just barely in the green. It's been pretty quiet out there. You'll see that, of course, when we go to the charts. Let's take a look at the news. We're going to go right to the Wall Street news. There's not a lot of news out there, except just the same old claptrap that we've been hearing for quite some time now. Americans apparently continue to sour on the U.S. economic outlook as uncertainty around President Donald Trump's policies and higher prices weigh on consumer sentiment. The latest Consumer Confidence Index reading from the Conference Board was 92.9 in March, below the 101 seen in February, and the lowest level in more than 4 years. The Expectations Index, which is based on consumers' short-term outlook for income, business, and labor market conditions, ticked down to 65.2 from 72.9 and remained below the threshold of 80, which typically signals a recession ahead. This marked a 12-year low for the Expectations Index, which was driven in part by consumers' expectations for their financial situation, hitting its lowest level in more than 2 years. The U.S. economy has undergone a narrative shift over the past month. After 2 years of outperforming expectations, it now appears the economy is growing slower than many on Wall Street thought it would. But while the economy is cooling, it isn't collapsing. Federal Reserve Chair Jerome Powell said during his most recent press conference on March 19th, growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Powell's description of an economy that seems to be healthy came after the Fed lowered its GDP projection for 2025 to 1.7% in its latest summary of economic projections last week. This marked a move lower from the 2.1% growth the Fed had projected back in December. Yesterday we talked about 23andMe. That's where you swab your cheek and send in the sample, and they match you up with all your relatives around the world and give you an idea of what your heritage is. Maybe you got 3% of this and 2% of that. You know how it works. Well, we announced the bankruptcy yesterday, but today the site is down. The login portal of 23andMe's website went down last night as customers of the DNA testing company rushed to delete their genetic data after it's filed for bankruptcy. Earlier in the day, people trying to log in faced long wait times or error messages and had to make repeated attempts to receive confirmation that their requests had been received. By Monday evening, consumers said the customer service chatbot gave a message that read the company was receiving a high volume of inquiries and increased web traffic. The chatbot directed customers to try reaching out again later. Some 23andMe users have sought unsuccessfully to delete the data of a deceased family member, and many expressed uncertainty about whether or how they would receive confirmation that the data had been deleted. Several also said they have a heightened interest in what happens to their data because of a password hack at the company in 2023 that exposed information belonging to 6.9 million people. Those whose requests for deletion were processed received an email from the company that said your data is being deleted, followed by an added detail. Your account will no longer be accessible and will be deleted per your request. Well, that's kind of like locking the barn door after the horses left the farm. From Bloomberg, DeepSeek did more than just show the AI industry you don't have to spend billions to build artificial intelligence. It fired up a long-dormant Chinese tech industry, and now Western names from OpenAI to NVIDIA may pay the price. Since DeepSeek upstaged OpenAI in January with a powerful model that purportedly cost just several $1 million to build, China's tech leaders have flooded the market with a rapid succession of low-cost AI services, undercutting premium offerings from the likes of OpenAI and Alphabet or Google. Chinese companies have in the past 2 weeks rolled out no fewer than 10 major product updates or releases, and that's just the big names. Well, interesting times we find ourselves in, to say the least. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, also crude, gold, silver. We're currently in week 347. Over the last 347 weeks, we issued over 19,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did this recap this morning at 6:30 a.m. Eastern. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 22 alerts. We're still waiting on the outcome of 9, so that gives us 13 actionable alerts so far this week, of which 1 or 8% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders. Now, the purpose of the logic alerts, yes, you can trade them, but the real reason behind them is to help you learn how to read a chart. If you want to learn how to trade, then you need to learn how to read a chart. You should be able to look at any chart of any market in any time frame, and along with the help of our humble indicator set, instinctively know what the next high probability move is, and understand that roughly 20% of the time the market will end up doing something other than the next high probability thing. We've proven that pretty well over 347 weeks and over 19,200 individual alerts. Now, every alert has an entry price, an initial target, additional targets usually, and then a final trade to target. The logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So logic is off to a decent start to the week, considering the market conditions. Now, 347 weeks, that's a long time. However, long before we had Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. They're published shortly before or shortly after the Globex open each evening. And yesterday, whereas I try to get them out at 5:55 p.m. Eastern, 5 minutes ahead of the Globex open. Thursday I got it. All of last week we got it, with the exception of Sunday. But this past Sunday night and yesterday, it was 15 minutes after the open. So what I do is I put a note in the discussion group that says CTAs will be out at 5:55 or they won't. And so the message I posted last night was they won't. Now, what this means is all of our members and all of our trial members had every one of these targets 15 minutes after the markets opened last night. Silver, gold, the NQ, crude oil, the Russell, the Dow, the ES. 15 minutes after the open. It's pretty quiet at the open, so didn't hold too much sway. So now, let's go look at the daily chart. And if you were tuned in yesterday, you saw us draw this circle. We thought this would be a pretty good place for the market to find resistance. These are reverse fibs. In an uptrend, you draw from the low to the high. In a downtrend, which we're now in, you draw from the high to the low. And so the high was put in February 19th. The low put in March 13th. Last week, we consolidated the entire week, Monday, Tuesday, Wednesday, Thursday, Friday, right at the 24% reverse fib. And as you can see, the step line acted as good support. Every one of those days, we closed above it. Even Friday, after we had a red candle way down to these previous lows from the week, right here, see? Okay. And we talked about this in the workshop, the members only workshop last Thursday night. Red and falling had turned to blue and climbing. And the step line, of course, a week prior had crossed red and falling. When that happens, we expect a retracement to the daily BBC. And that's exactly what we got yesterday. And today, institutional traders are undecided. As you can see, we have a doji that just perfectly straddles at the moment the 38% reverse fib. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. Because of the account size of the institutional traders and the size they trade in, they're the ones that actually move price. So whatever you trade, whether it's futures or stocks or crypto or Forex or ETFs, I encourage you to spend 2 minutes with the daily chart before you drop to your smaller time frames and start trading. Because the daily chart gives you the big picture view. Number one, you get a free look over the shoulder of the institutional traders to see what they're doing or not doing. We had a lot of selling going on this day, and obviously selling on this day, buying on this day, but we just kept straddling that 24. Then yesterday, institutional traders drove us right up to the spot we were anticipating, the 38% fib and the daily BBC. And now they're stuck. Do they keep buying, or do we get a retracement? Now the pullback to the BBC, whether you're pulling from below or pulling from above, the pullback holds more often than it doesn't. However, eventually it will trade through. Keeps the markets fluid and tradable. Now, it's called the BBC. It just stands for bull bear cross. When price crosses above the green line, we expect higher prices. Price crosses below the green line, we expect lower prices. Now the markets are fractal in nature, and so is the BBC. You could put it on a daily chart, a weekly chart, a monthly chart, or a 1-minute chart. The information that it gives you will always be relative to the time frame you put it on. In other words, you won't get daily results on a 1-minute chart or vice versa. So here we sit, stuck in the middle with you. Now, what would happen under normal market conditions is we would get some kind of leg to the downside with potential support here at the black step line, and if we make it through there, blue and climbing should act as good support. However, the market can continue all the way up to the 50. Now, I let everyone know this morning in the live training room that 58 58.44 half was potentially good resistance. Okay. Now if we come over here, let me get rid of this circle for a minute because I can't. The high so far today, 58.37. But when price gets up to 58.44, you should expect resistance. Can it rip right through it? It can, but you have to embrace all possibilities. So if you're trading the S&P long, don't forget this number, 58.44. Okay? Now, I'm not saying price will get there, but if it does, you should tighten your stops, take your profits, whatever the case, whatever's appropriate for you. Now, all 30-minute charts, all alerts, are based on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose years ago. And if they say if it's not broke, we'll leave it alone. So I did. The vertical lines separate today, Tuesday. Back here is Monday. This was the gap higher open Sunday night. Then back here is Friday. Now these are this week's weekly trading zones. The weekly zones are published every Monday morning at 6:15 a.m. Eastern. When price rallies up to a weekly zone, we expect resistance till proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. We have published the zones every week for our members since December 14th of 2009. It's a little over 15 years. As you can see, this was the opening candle last night at 6 o'clock. 15 minutes into the life of this 30-minute candle, the targets were published. Price was pretty quiet overnight, and we just consolidated until about 5:30 a.m. Eastern this morning. We got liftoff, and it took us up to, and we actually spiked the long target. Now you can see that the long target was based off of this high put in yesterday, 58.20. The high was 58.25 half, so the long target was 58.25. Now price has gotten below the BBC, and we have red and falling overhead. Just like when red and falling turns to blue and climbing, we expect higher prices. When blue and climbing turns to red and falling, we expect lower prices. Now right here, you've basically got a bullish cross. You can see that red and falling was just below the BBC, and then the blue line crossed the green line. So when you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So along with that other number you wrote down, you should write down 58.10 conservatively. Okay, that's potential support. So I think it was 58.44 where we're looking for resistance. Now see, on the daily chart or on the smaller time frames, you can't see what we can see from the big picture. On the smaller time frame, you have no way of knowing that 58.44 is potential resistance. On the 30-minute chart, you can also see, while you can't see that resistance, you can see this potential support, and then the overnight lows around 58.03, this low here, and then this low right here. That's the short target defined by market structure. From the high to this low, and it looks like that's where price is trying to head. Okay. Remember, the pullback holds more often than not held here beautifully, but this just might be the spot with red and falling overhead. Remember, it takes financial commitment for price to rise, but for price to drop, all that's required is not financial commitment, but for the institutional traders to simply hit pause on the buy side. And without anyone hitting the offer, price would just deteriorate. So you got potential support here, but if it comes together the way I'm thinking it might, then this low right here, that's the short target. Okay, but things are so quiet, and we don't have any more high impact news, I don't think, until Friday. On the Dow, here's where we opened last night. We dropped to the BBC, the pullback held, red and falling turned to blue and climbing. See, we never pulled away from the BBC to the downside until now. So we had no reason to be concerned with the short target. We're below the BBC. We have red and falling overhead. Obviously, from the BBC, we had the perfect stack on the way up. Price, step line, blue and climbing, BBC. We hit that long target 1, 2, 3, 4, 5, 6 times, and it held. And when you see a lot of wicks like that sticking up, that's a pretty good indication that price is heading lower. And that's exactly what happened. The institutional traders, they're not going to just keep throwing good money after bad. If they can't move price higher, and you can see they've tried, because these were green candles all the way up, okay? But it looks like they've decided to hit that pause button. So now we've got potential support at this low here, at these lows here, of course at the weekly trading zone, and if we get through the zone, then this low right here, that's your short target. Could the market drop that far? Absolutely. Is that a forecast? Nope. Just making you aware of the important prices, important areas, and what to expect. Now, if price gets down into this area here, okay, say 42,770, there's really nothing in the way of price making it down to the weekly zone, which is 42,715/720. On the Russell, this was the open last night. We had blue and climbing directly above price. Now, as you can see, blue and climbing is bullish. But when it gets directly above price, it can actually become resistance, because it may be on its way to turning into red and falling, which is bearish. So off the open, we had a pullback to the BBC. Looks like we might have missed it by a tick or two. Support will always send the market looking for resistance, which it found at red and falling. That sent us back to the BBC. and we actually got below it, and we spiked down to 2112.7. So we missed the short target on this move by 10 ticks. Okay. Support's going to send the market looking for resistance. We got through the BBC, but the pullback held. And we had another leg and a retracement. Pullback held. We closed here, and then price continued on right up to the long target. And as you can see, the long target is simply this high from yesterday. That high yesterday was 2127.9, and today's high was 2128. So that's a 1 tick difference. Yep. That was 27.9. And that's 28, yeah. 1 tick difference. So we hit the long target. Resistance is going to send the market looking for support. Send us down through the BBC, where we hit the short target, pretty much to the tick. Short targets based off this double bottom right here from yesterday. The low here was 2112. Here was 2112 and a tick. And the low here, 2111.9. Okay, so we went 1 tick beyond the target. Support sends the market looking for resistance. The pullback to the BBC holds more often than it doesn't. And once blue and climbing turned to red and falling, that sent the market back down to the short target, pretty much to the tick. I overshot it by 4 ticks, 2111.6. So again, support sends us up to resistance. Now we're building a green candle, but we're below the BBC. When price is above the BBC, you expect higher prices. When price gets below the BBC, you anticipate lower prices. But all of these pullbacks held. They never pulled away from the BBC. Okay. You see how none of these candles are touching the BBC, but all of these are. So from this support up to this resistance, so far the pullback is held. But with red and falling about to create a bearish cross and potentially get below the BBC, then we could see a retest of this low, the target. And if we trade through the target, then this low right here, which is about 2110, and then the zone, which is 2107/2108. So what do you do right now? Nothing. You gotta wait. When the markets are sideways like this, best trade is typically no trade. Crude was interesting. Here's where we opened this candle last night. Hit blue and climbing, and because it's directly above price, resistance, as it's on its way to becoming red and falling, which took us back to the zone 6910/15 and the BBC. Okay, so the market tried and it tried. Got a little double top right there. That sent price down below the BBC. Now this low right here is just above this low right here. This low 68.88. This low 68.86. So 2 pennies. Buyers came in off that support. drove us back above the BBC. We got that perfect stack, price, step line, blue and climbing, BBC. We hit the long target. We consolidated for an hour and a half. We attempted higher, but then the step line crossed blue and climbing. And again, blue and climbing acted as resistance. It then turned to red and falling. And as you can see, it took us all the way down to the short target and beyond. In fact, this low right here, 68.52. This low right here, 68.49. 3 pennies difference. That support has now bounced the market almost all the way back to the short target. For this to turn around would take a lot of work. We got a new candle right here. You can barely see it. It's a doji. And what do we got? 12 minutes left in the life of this candle. So things have gotten very quiet on crude. We've got the bearish cross up here. The red line's below the green line, right? So my expectation is on the way down, potential support, but on the pullback, potential resistance, and then potential support at the zone, at this low, then this low, and then the zone, 68.30/68.35. Next is gold. Here's the opening candle last night. We're below the BBC, but we're above blue and climbing. So we dropped to support, pushed us up to resistance, and then we're below the BBC, so we anticipate lower prices. The low of this candle was 3010.8, so we missed the short target by 8 ticks. Yep. So buyers came in a little early. You see how that lines up? Got us back above the BBC. We got a leg. Got a retracement. The pullback held. Then we got another leg that took us all the way up to the long target. Now yesterday we had a bearish cross. Red line got below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. Then we spiked it. Then we made it all the way up to the zone, which we expect to be resistance till proven otherwise. Resistance sent us back to support at the BBC, and that sent us up here. And if you go look left, you'll see way back there's a bearish cross right there. Gotta scroll way back to see it, but it's there. And that sent us down to the BBC, and now blue and climbing's turned to red and falling. So price is trapped here. You got the zone overhead as resistance. You got the BBC as support. Blue and climbing just turned to red and falling. So it's possible buyers will take us above the zone, and then you know you've got potential resistance here as well as here. If we start heading lower, if we get below the BBC, you've got support here, 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 and then you're back down to this area where the short target is. Our price looks like it really wants to move higher, and we are above the BBC. So I would let price get up to 30.39 up to 30.41. That would be $200 per contract traded. Silver. Here's the open last night. We dropped to 33.43, and the target was 33.42. So we missed it by a penny. But you only need 2 pennies to get your goal for the day. So there was room in that candle down into this area, plenty of room to get your goal for the day. So buyers come in, support, send us up to resistance, back to support, back to resistance. We had a bearish crossover here. Okay, so that's that first candle. It's the first time up that it's most likely to be good resistance or good support if it's a bullish cross you're working against. So that sent price back to support and the zone, support times 2, and then it was liftoff. Leg, retracement, leg, retracement, leg. Now we've had one consolidated sideways for 1, 2, 3, 4, 5, 6 candles. That's 3 hours. You got blue and climbing overhead, potential resistance. The step line has crossed blue and climbing. So what's most likely to happen from this point is we'll see a retracement back to the price. Always reverts to the mean. In our case, the mean is green. It's called the BBC, bull bear cross. So the step line is crossed. So I anticipate that price, I would let price get down. Remember, you only need 2 pennies to get your goal for the day. So 34.09 down to 34.07. I mean, that's really conservative, but it's enough to get your goal for the day. Now, support times 2, we would expect that to hold. Silver's up pretty good on the day. A $1 move in silver is worth $5,000 per contract traded. So we either go up and bang our head on this. Now, could we overcome it and continue higher? Yeah, we could. Silver's having a great day. But based on what we see day after day, price will work its way down and most likely find support in this area, give us another leg to the upside. In the event price were to trade through the zone and through the BBC, you would look for support here, 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 and right here where the step line crossed blue and climbing. That is an important price, important area. And again, the long target is based off that previous bearish cross. And we've had no reason to, here it is. What did I say? We came within a penny of the short target? Yep. So back to the daily chart. We're above the 38. We're above the VBC. We got blue and climbing below us. The high so far, 58.37, and the potential resistance we're looking for is up at 58.44. Write that number down. I think it may become important later in the day. Okay, Michael is going to give us a recap of what happened this morning in the live training room and do some live trading on the TradingView platform. And then I'll come back and wrap things up with our good word for the day.
All right. Yeah, the markets have been really strange today.
Yes, they have.
Waiting for a big move, one way or the other. And I'm afraid that this wait might last more than today.
Yeah, I think we could see a sideways consolidation. When we first began the broadcast, we had a perfect doji straddling that 38% fib retracement. Now we've moved up a little bit, but anyway, your screens look good, so.
All right, then I will get right into it. Ready?
Okay.
All right. Good afternoon, everyone. Today is Tuesday, the 25th day of March, 2025. So, yeah. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. Once you click on that purple button, there's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page where all that we ask for is your name, your email, and your phone number. Again, I didn't do that. All we ask for is your name, your email, and your phone number. If you have NinjaTrader and you want to use Ninja charts, give us the machine ID. Okay. If you're just going to trade on Ninja, we don't need the machine ID. We have optional over here, but if you're going to take the trial, you really want to get TradingView. Gives you TradingView login ID. All right. Once you give you TradingView username / login ID, then we'll be able to enable the indicators for you and get your indicators indicating on your charts. All right. All right. So we had a really slow day today. This was not the high of the day. Yesterday we didn't end at the high of the day, and today we didn't end at the high of the day either. The markets, as we get up to this point that Dwayne was just talking about on daily chart, we got up to the BBC. We closed right at just a little above the BBC yesterday, which makes it a perfect consolidation place. I'll show you something in a minute, but it's typically would be a good bounce point right here. It would bounce down. So we're going to need something. There's going to be some kind of impetus to send it down. There isn't. You need an impetus to make things go up, really. You need buyers to make it go up. You just need no buyers to make it go down. And sellers to make it go down. But anyway, so here we are. Today, the 25th day of March 2025. We're up 24 ticks on the NQ, 24 ticks on the Russell, 26 ticks on the gold, and 10 ticks on the ES. So I was up 20 ticks on the ES until the end of the session. We stopped out on the ES straight toward the end. So they would have all been in the 20s. That would have been a really odd thing. Anyway, we ended with $625 per contract. Today it's 50 minutes and 14 trades to get to the goal for the day. At that point, we're at exactly the goal for the day. $100 per contract, 1,000 with 10 contracts on. And we took a total of 31 trades this morning. Now, we did have 2 opportunities to get the goal for the day early on, but I missed them both. And, when I miss them both in the morning like that, first thing in the morning, I don't usually stress about it because, usually there's a bunch of opportunities right after it. I didn't really stress about it today, but it did take forever to get the opportunity we needed to get the goal for the day. I'll get into that in a minute. Anyway, on the month, we're at $20,982 over 12 business days, averaging $1,748 per contract for a 2-hour business day. On the year, we're now at $78,465 over 49 business days, averaging $1,601 per contract per 2-hour business day. Now, just thinking, if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you would have only had to work 8.11 hours, and you would have averaged $1,886 an hour. And that's down significantly from yesterday because today it took a long time to get just the goal for the day. Yesterday it took just a few minutes to get 3 times the goal, almost 4 times the goal. But anyway, you'd be at $15,315 in profit if you started with 1 contract in January and quit trading when you got the goal for the day and added 1 contract per month. You'd be nearing the end of your 3rd month. The idea is to get to $2,000 per contract before you add your 2nd one on. And so you can see there is plenty of reason to add. The first one was here, $2,000. You had the 2nd one, you get to $4,000. You had the 3rd one. We're now at $6,000, so we should be able to add the 4th one. And we will. At the end, not the end of next week, but the week after that, I guess, is when we roll to it'll be on Tuesday the 1st. So it's actually a week from today is when we're gonna go to 4 contracts. Yeah, that's when it's gonna be, a week from today. All right. Anyway, let's get into the trades. All right. We didn't have many trades at all today. Well, we had 31 trades, but on the NQ, we didn't have many trades. In here, this is the gold, and Let me get my stuff in front of me again here. Yeah, this is the right one. Okay. On the gold, we started out, our first trade on the gold was a stop out, minus 10 ticks. Then our next trade was a +5, got us to -5. Break even, then a +1, got us to -4. Then a +2, got us to -2. Then a +8, got us to +6. Then a break even. Then a +12, got us to 18. Then a +5, got us to 23. A +1 to 24, break even, and then a +2 to 26. And that was where we ended it with gold. And you can see there's a whole bunch of chop right here, little bursts of activity, and then a whole bunch of chop. So what I was trying to show people today, and I'll do it when I start trading in a little bit, what I was trying to do today, since we had enough time for me to do it, was kind of talk through what I'm thinking in the trades when the trades are happening, what the price action is telling us the market should do. And I was entering my trades based upon that information. Okay. I wasn't just saying, okay, we're in the overbought, we're going to sell automatically. You know, I'd say, okay, we're in the overbought, but the pullback should go a little bit further. So I'm going to let it go a little bit further. And then I'm going to enter the trade. I'll get into that kind of stuff in just a minute. But on the gold, that was what we ended up with. Okay, we were plus 26 on the gold. All right. And the Russell, we started out here on the Russell, we had a break even. And then we stopped out minus 25. And then we got 10 of that back, got to minus 15, then 5 more, got to minus 10. Then we had an 11. No, we had a 20. I'm sorry, we had a 20 that got us up to plus 10. And then we had a break even. And then we had a 14 got us to 24. And that was where we ended it with the Russell. And again, you can see that it just has not really done anything. We can see the whole day in like half a screen. You know, there wasn't a lot of activity. Okay, that's how we ended up with that. Now on the ES, let's go back to the beginning. This is the whole day on the ES. Okay, we started out here with a plus 4. Then we stopped out, put us to minus 6. Then we picked up 14 ticks. I think that's where we got the goal for the day right there. 14 ticks, that got us up to plus 8. And then we had another break even, and then 8 ticks got us to 16. Then another break even, and then 4 ticks got us to 20. Then a couple of break evens, and then a stop out brought us down to 10 at the end of the session. Okay. Yeah, that was it. Brought us down to 10 at the end of the session. And during the break, you see it had a slow grind. Well, it had a pretty nice leg, and then another copy of that leg, and then the pullback. Didn't quite make it to 50%. It got up to this level right here. 1, 2, 3, 4 times before it finally went through it. 5 times before it went through it. So the markets are just difficult. We ended up with a plus 10 on the ES. During the break, there was a short right there. There was a long right there. There was a short right there. There was a long right there. There was a short right there. There was a long right there. There was a short right there. A long right there. And that brings us to current. Now the NQ is when we oddly had the least amount of trades on today. Okay, now I had shut that off because I was helping somebody during the break. Steven, are you in here right now? He's not in here. Okay, I accidentally sent the picture to, I took a picture of my charts when I was talking on the phone with Steven. I accidentally sent it to Greg, but it doesn't really matter. Okay, so on the NQ, we started out with a break even, and then we had a plus 12, and then we had another plus 12, and that was it on the NQ for us today. I don't feel like we missed a whole bunch. If we go all the way back here, there was 930. We missed that trade right there that gave, it went 50 ticks into profit and then it turned back down. There was a trade right here that would have stopped me out, I think. A trade right here that probably would have been a break even. A trade right here that went 50 ticks into profit. Then Next opportunity wasn't until all the way over here. That would have been a good trade right there. Well, it would have been break even at the worst. And then we got the trades that we did get. We had the long trade right there. We picked up 12 ticks. I missed the short trade there. And I got the short trade over here for 12 more ticks. There was another one right here. This was at the end of the session. Another one right there was a nice trade. There's a long right here that would have been a break even. A short on this bar right here that would have been profitable. That was it. It wasn't giving up the trades today. And even if you go look at some other time frames, like look at the 100 range, you had even less in here on the 100 range. You had one trade right here. That was a decent trade on the short side. One trade right here that would have been a break-even trade. And one trade right here that would have been a break-even trade. And that was it on the 100 range. If you drop down to the 31 range, remember on the 31 range, just stop. It's a 36 by 48 bracket. Okay, I should have said that too. Forcan, is he in here? He's not. He asked me earlier. But a smaller time frame on the NQ. It looks like there was some pretty good opportunities here on the 31 range. I'm just looking at where the blue leads into the overbought, the oversold by itself. There, back here. Right there. Any one of those was enough to get the goal for the day. This one right here. It looks like it dropped enough to get the stop to break even. Remember on the 31 range, it's just going to go 4 points into profit to bump that stop. And here, there, and there. Yeah, there's some pretty good opportunity here on the 31 range for the NQ today. But alas, I was on the 50. So that is where we took our trades from. All right. So the thing I was telling people is something like this right here with the gold, for instance, this morning. All right, this is your leg down. This is your tracement of the leg down. So when it pulls up here, what I was looking at is look at the level of retracement that you got on this. Okay. So 50% is right up here. That's what I'd be anticipating, a 50% retracement. So you got your indication right here where it came up and it gave you a short. Now, if you took it right there, that's good. You got some profit in it, or you got it to go to break even at least. But what I was looking at this morning is if the pullbacks are going to be a 50% pullback, then you'd wait for it. After you get the open, wait for it to pull back a little bit deeper and you get a little bit better entry than just the open, right? And that's been helpful to me today in the trading that I've done. All right. I don't have the question box up. Bring that up and see if anybody's asked any questions. Nobody's asked a single question. Excellent. All right, well, it is 1:10, so we have 20 minutes left for trading in here. And any questions you guys may have. Now, what is... That was Bitcoin, but I swapped it to the ES. This is the BBC on the daily chart right here on the ES. See how we're above it right now? So what it should do over the next couple days, I was going to show you this. That's what I had mentioned earlier. Let's go in here and put the MA1 on and the BBC on. The old BBC and the old MA1. Now, way back in the very beginning when we first started doing things, we really didn't have a lot of indicators, all right? We had the BBC, we had the MA1, and what we looked for was for price to cross, the MA1 to cross above the BBC, and then price to pull back and test the BBC and give you an up close, right? And that's when you would take the trade. And you would look for it to get up above here, and then once it got up above here, well, then you would look for it to finish its leg length, all right? At least get up to the prior swing high, but to keep going. That's what we would always look for. So with the information that we have right now, prices run down and pulled up to the BBC and tested the BBC, the first test of the BBC usually holds. All right. First test of the BBC usually holds and then sends it back in the direction it came from. That's what usually happens. So knowing that, this should send it down here, right? Down to 55.60. That's what it should do. But, see, these are not normal times. See how far it went through the BBC? There and there. And then it never put in a higher swing right here. When it tried to get up there, it never put in the higher swing when it got on the other side. So what we really have to watch for now, the first thing we have to watch for is see where this bar closes and see how close the MA1 is. All right. That's what we really have to watch for. Now, there used to be another thing that we had way back in the day. I don't know if I left it in here on the price panel. I don't think that I did, but let's see. This is the sentiment is what we called it. And we don't have it anymore, but it was a much longer term picture. And we would look at that for bigger term direction. And right now, I would imagine, yeah, let me just put something on here that I believe, if I remember, it was pretty close to being part of it. And we'll change that and this to that. Okay. Yeah, so overall the sentiment would be bearish still. Yeah, the sentiment was a couple of different things, but overall it'd be bearish still, the overall sentiment of the market. But what we should expect from here is a push down, and once it gets below here, below the BBC, I'm sorry, below the MA1, it needs to put in a lower swing if it's going to continue in that direction. If it fails to put in a lower swing, like this failed to put in a higher swing, if it fails to put in a lower swing, I would look for a reversal. Okay, and that could take a week for all that to play out, maybe even 2 weeks for all that to play out. But that's the current state of the market right now. That's why today's been so wacky, because the markets are just in equilibrium, for lack of a better word. Okay, so over here on the gold right now, you see how we just got down into the oversold by itself and we're down at support. Now the open of that bar right there is where you would have been buying, but I would like to buy down here. This is an even better spot to buy, a little bit lower down here. Okay, so I'm interested in it right here. I haven't filled yet, but I'm interested in it right there, and we'll see if I do get filled. Okay, I'll put it right there. Okay, now I just got filled. Okay, now I like it better from down here. One, it should bounce from here back up, but what's happened here, and this is what I was trying to do this morning, is tell you what the price action is telling us. Okay, let me slide this back over here so we can watch it a little bit. What the price action is telling us. All right, this was the move down. It should have a 50% retracement. It didn't get the whole 50% retracement, and it gave a push down to here, which is support. All right, you're in the oversold at a level of support. So at a minimum, it should pop it up here. All right, at a minimum, it should go up here to 28.4, which is right there. I know on the chart that doesn't look like much, but on the DOM, at 10 bucks a tick, you know, it's significant. Every tick is $100 for me right now. Okay, so what I'm looking for is for it to get up from 27.5 up to 28 right now. I'll bump the stop to break even. Okay, and at a minimum, it should get up to 28.3 probably. Right, if it drops down below right here, below 27.1, below here, it's going to stop me out. So that's what it should do based on the price action. Do you guys understand that? The whole price action thing that I'm talking about? Right. When price It's going up and down and up. And then it fails to exceed the prior swing high, and it fails to exceed the prior swing low. Then it does exceed the prior swing high. Then it does exceed the prior swing low, which is right here. And so right now, this is acting as support. So what it should do right now is it's either going to break down below this, which is what I was saying. If it gets down below 27.1, we're going to stop out. It's either going to break down below that and make it down to here, or it's going to get up above this and try to get up above that. All right, but I'd be happy if it just got up to this. Right, but that's what the price action is telling me. So entering right here at the open of that bar didn't make as much sense as waiting till it got down here. Right, getting the better entry down here, which I did do at 27.5. It wasn't the greatest entry, but it was part of the way down there. So right now I'm just waiting for it to get up to 28.0. And then I will bump the stop to break even. Nope, it's sold off. Boy, there are some sellers right up here. Don't want it to go any higher. Did you see how quick it dropped down there? Once it does go through that, though, it might be really fast. As fast as it was going down right there, it might be that fast going back up. You see how the market's really thin right here? You just got a little spread in it, a 2-tick spread. It's about to make a big move one way or the other right now. So 8.0 is what needs to go up for me to bump the stop. And that's what I'm looking forward to, is being able to get my stop to break even, getting the risk off the trade, so I don't care if it stops me on a break even. I mean, I'd like it to give me all 30 ticks. I think that's what I have in this. Yeah, it's 30. 30 tick profit target, I believe. 27.5. It's 10. 20. 30, I guess. Yeah, it's 30. One more tick. So close. There it is. Stop to break even. All right, now I have no risk in this trade. It should get up here to 29.0. Right here is what it should get up to now. Okay. Now I'm going to lock in just a little bit of profit so I don't lose anything on this trade. And it should get up here at a minimum to 29.0. And I got out with a couple of ticks. All right. So I walked you through the whole thing. That's everything that I was thinking from start to finish on that trade. Okay. So if you look at the Russell right now, look at the Russell, look at the ES, and look at the NQ. Just do a quick evaluation of the same stuff. Oops. Quick evaluation of the same stuff here on the Russell right now. Right. So it gave this leg up with this retracement. It gave this leg up. This is the retracement so far. Now, there's some resistance right here. There's some resistance right here. There's a little bit more resistance right up above it. So it's in a spot where it's likely to get into some chop right here. The pullback should stop right about here. Right. This pullback should stop right about here. And then move up from there to about right here. About right there is where it should move up to. Okay, that's the Russell. And the ES has just changed things here because you had to leg up, pull back, leg up, pull back, leg up, pull back too deep. So now you had the leg up and the push down. So the ES is at a changing point right here. It's at a trend change potential. You guys see that? You probably don't do that kind of analysis, but up, down, up, down, up. This is where it can't go below. Down, up. What's the next level of support? Right here. and right here, down. That's what we should see. Okay, that's the yes. Now, I said that was going to be a buying point, possibly, right? The blue didn't lead down into the oversold, so it's not. But it should probably go up from right here. That line that I drew in should probably go from there up to here. And the blue did not lead into the oversold, so it's not a trade, but it should go up from there. Okay, and now look at the NQ. The same analysis. The NQ's got the same thing that the S just had. Okay. You see, we'll do the legs in this guy right here. It went down, went up, went down, went up, went down, went up, and then stayed sideways, went down, went up, went down, went up too far, went down, then confirmed the up move, then went down too far. So what it should do now is go up and find resistance right here, right there. Then make this leg down, which should put it down here. That's what it should do right now. That's the NQ. So I don't know what anything's gonna do, but that's just what it looks like to me. Okay, this dropped all the way down there and it bounced off of that. This one is at this level, and we'll see if it bounces off of that. Remember on the gold, I just drew this in for you a minute ago. When it stopped us out, it said if it does stop us out, it should keep going down to here. Find support and push it back up. And now it's pushed back up and it should find resistance up here. It's not going to give us a trade setup, but it should find resistance up there. Okay. And this is dropping through. Now I eyeball that if I do the exact measurement on it. I guess my eyeball was a little low, actually. But that's what we're looking at. Okay, the marks have just been horrible to trade today. So right here, right now, the blue just led into the oversold. So this should actually bounce up from here. This is not a bad entry right here on the Russell. It's pulled back quite a bit from the open of the bar. Right, the open of the bar would have been the entry point, but it's pulled back quite a bit from there. This is not a bad entry on the Russell from right here. It should go up to here right now. That's what it should do. We'll see what it does do. Okay. This down here will be the next area of support. Right at my stop is the next area of support. I should have waited and entered in down here. We'll see. All right. So
So while you, in fact, got a better fill, you could also put a buy stop order at where it should have, where you would have originally filled if it hadn't drawn down further. But is one, do you consider one option better than the other? I realize in this case it's starting to look like that might have been a better option, but just overall.
yeah, well, the thing about waiting until the open happens, because then you have an idea of what you have to work with. You know, a lot of times if you wait for the open to happen, instead of having the buy stop limit or sell stop limit order to wait to get you in right as soon as the bar closes, a lot of times you're going to have an opportunity to get a better entry. This is one of those opportunities. And today, you know, there were a few times of the 31 trades today, I bet probably half of them I got a better entry than the open by waiting. But I mean, today's been an unusual day. So it's been a day we really have to exercise a lot of patience.
Seems like it's been an unusual few weeks.
Yeah, well, I mean, the amount of follow through and the number of break evens today seemed like it was more than normal.
You know, I mean,
And a third of the trades today were breaking
everything
even.
we do is technical, but there's so many crazy fundamental things happening in the world that,
True.
I mean, normally we just ignore the fundamental stuff. Some news comes out, and then 30 minutes later the markets go back to normal, whether it was good news,
Mhm.
bad news. But it, it's like every minute of every day we're in some kind of news cycle. There's, and I know
Yeah,
you don't watch the
there's
news, but I
no, but
mean,
it flashes up on my phone. Like just now, there was just a ceasefire in the Black Sea, I guess is what there was.
the world right now is just kind of like a dumpster fire. I mean,
It is. It sure is. It sure is. And, and it's funny because he's got like, in one hand, he's got a fire extinguisher, and in the other hand, he's got a gas can. So,
yeah, I mean, the people elected him. I don't understand why, and he controls, you know, the Senate and the House. I don't understand why they can't just let him do his job. These lower court circuit judges, I don't how they can overrule the president of the United States. I mean that just turns our whole
yeah,
America on its head. That's not it's Our forefathers never intended that.
no, that's why we have the Supreme Court. And so it should never come to a head like it is. Whatever the president says should go until not until some lower court says they file an injunction. They can file whatever they want, but what the president says should go until that's settled by the Supreme Court, not the lower courts. Is my thought, but I don't know. I don't know. You're right. I don't follow the news.
And the taxpayers who elected the president, I think they're all pretty much on the side of getting rid of, fraud, waste, and abuse,
And
because that will
and
lower
illegal.
the taxes that they have to pay. This resistance against him and Musk to try to, you know, clean house and make things right. And I can understand people who are getting paid like $6 million to study transgender mice. I mean, I can understand them being upset that their paychecks all got whacked, but
Yeah,
but I
yeah.
mean that doesn't apply to
Because
99.9% of the people in America.
even even fewer than that.
Yeah.
There's like 10 people out of 300 million that may be interested in transgender mice. I don't know. I don't get it. I don't get it. I I just don't get it. It doesn't make sense, and I just hope Trump ends up living through his whole 4 years and be able to pass it on to somebody equal mind.
Yeah.
There's already been 2 attempts on his life. Just because he's president now doesn't mean they're going to stop.
Right.
But now he should have a lot more Secret Service, I think, protecting him. But I don't know. Who do you trust? It's a crazy, crazy world.
While he still has control of the House and the Senate, I mean, he should have the Speaker or somebody should force a bill through that these lower circuit court judges can't overrule the President of the United States of America. I mean, they need to pass a law that specifically
Well, I
prevents that.
think the thing that'll come up then is that'll make him a dictator, and I bet that's what the fight would be. But I don't know. I don't know about that. Just think the people nominated him, and people don't want. The big stink right now is getting rid of all those 200 or so gang members. I mean, they're all killers. They're all murderers and rapists and everything else, and people are fighting that. Really?
Yeah, it just
Boggles the mind, doesn't it?
it's beyond mind-boggling. I mean, these are ruthless criminals that have killed American women, molested children. They're being
That
each
that
one of
judge.
each one of these people that are protesting this. They should be put in a room for 5 minutes with one of these trendy Aragua guys and
Hmm.
see if their opinion changes.
Right, right. Yeah, yeah. Anyway, we got way off, way off. It's time.
Yeah.
It is time.
All right.
All right. So there's a long rate here on gold. We did stop out on something there a minute ago. I think it was the Russell trade. Um, but the markets are just, if you got your goal for the day, I would stay away for the rest of today. See how things at the end of the day. Let's see how the daily ends up. Because if it ends up a doji right at the BBC, then that's probably going to be for a long day tomorrow, I would think. But we'll trade what's in front of us. That's what we do. We trade what's in front of us, and that's worked for us for almost 2 decades. All right, so let me show you guys how to take the free trial. Okay, if you haven't taken the free trial, let's go here to mytradingq.com, click on the purple button. There's no credit card required for the trial. It's going to bring you to this registration page, and I am going to actually take the time to change right now. On this registration page, all we ask for is your name, your email, your phone number, this information right here that is good for us to keep track of, and this one right here in particular, if you answer that wrong, you won't get any emails. We need your TradingView login ID, right? For you to get the charts, the charts that we use down here at the bottom, we need your TradingView login ID. This is only on TradingView. All right. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Looks like you are.
Yeah, and before I ask the question, I'll just show you.
Yes.
Here's where the daily is right now.
Let me move it over here. Oh yeah, big doji right
See
there,
it
right
there?
at the BBC. Yep.
And that's
Yep.
how it was at the beginning of the broadcast. And then it moved up. We got a little green above the 38 and the BBC, but now it's back to just being a doji at,
Right at the 38 and right at the BBC. Exactly at the 38 and exactly at the BBC.
yeah. And we started talking about this move up last Thursday night in the members only workshop. It's unfolded as we
That's
suspected
exactly
it would.
That's what we thought.
But we could, like last week, every day, Monday, Tuesday, Wednesday, Thursday, Friday, we were straddled the 24% fib. And the step line acted as support. Even on Friday, when we ran all the way down, and then going into the close, we ran all the way back up, right to the 24, and left this wick. So the black step line held as support. So I would at least think off of this area we're at, we would at least get a retracement back to the black step line, and if we trade through that, possibly down to blue and climbing. But if we manage to take out this resistance at 58.44, then it's clear sky up to the 50% fib.
Yep.
So, anyway, okay. Recap of the morning session.
Today, I believe it took 50 minutes. That's 50 and 14 trades to get to $1,000 with 10 contracts on this morning.
Way to hang in there.
Thank you.
All right, guys, we have covered all the markets, so if you would like to become a member, you can go to mytradingiq.com to learn more. You can send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, just put your name and your phone number. We're not going to call you. We don't have a phone room or a sales department, but we're going to send you an info-packed email that explains everything it means to become a passport holder. And there'll even be a link you can click if you decide you want to become a member. First off, you're going to get 2 hours of live training every trading day. That's live trading and live markets in an interactive environment. That means you're watching each trade, as Michael explains, every move he makes, every trade he takes, and the reason behind it, while you trade along in demo to qualify to go live, and asking every question that pops into your head. 9 out of 10 new traders do not have anyone to teach them how to trade. Is it any wonder that they do not succeed? But that's just part of it. We've plugged that hole by providing you with 2 hours of live training every trading day. But you also have access to private one-on-one mentoring. As a passport holder, the strategy you learn, the indicators that you own, they're fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. And that's why I always stress at the beginning of this broadcast each day, use those Logic 247 alerts to trade them if you want, but more important, use them to learn how to read a chart. You need to be able to look at a chart and know where to expect potential resistance, where to expect potential support. In doing so, you're then able to see the windows of opportunity that lie between those points. As a passport holder, you'll get the Logic 247 alerts around the clock as opportunity presents. You get the concierge trade alerts every evening the second they're published. On Monday mornings, you get the weekly trading zones at 6:15 a.m. Eastern. We've published the zones every week for our members since December 14th of 2009, a little over 15 years. And you'll be able to attend the members only workshop every Thursday night. Plus, you get the golden key that opens all the private channels in Telegram. We got public channels, private channels, but as a passport holder, you've got access to everything. So send your email, go here, study up, and then send your email to support@cfrn.net. And now we'll wrap it up with our good word for the day. Yesterday, we talked about trying to be more flexible. Today, let's talk about hope for the future. Proverbs 23:18. There's surely a future hope for you, and your hope will not be cut off. Are you surrounded by people whose mission is to inject a dose of reality into your life? They continually point out how tough the economy is, how dismal the job market is, and how the sky is falling. American author John Gordon writes, I remember my high school English teacher telling me not to apply to Cornell University because they wouldn't accept me. And if they did, I wouldn't be able to do the work. I almost didn't apply. But a few days later, a former teacher said, if you get in, go. You can do it. His words made all the difference. I applied and was accepted. The world needs more optimists, encouragers, and inspirers to speak into the hearts of others and say, I believe in you. Follow your passion and live your purpose. If you have the desire, you have the power to make it happen. Keep working hard. You're improving and getting better. The economy may be tough, but you can still grow your business. The job market may not be great, but you'll find the right job. Even if you fail, it will lead to something better. You're learning and growing. The difference between success and failure is belief. And often that belief is instilled in us by someone who encouraged us. The Bible says in Proverbs 29:18, where there is no vision, the people are unrestrained. Vision is a desire to move ahead. Without it, you stay stuck where you are. It doesn't matter what anybody else thinks. God says in Proverbs 23:18, there is a future for you. And when you look to Him, He will give you the strength to go forward. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.